Good evening. Welcome to NinjaTrader, the Sunday Open. This is Leo, and I've got Sara, the Strat Sniper, Pax,
$3.30.
and Pharm. What's going on? What's going on? Did you guys have a good Christmas?
Yeah, I missed you guys so much.
I did too. I missed you guys too. It was a wonderful Christmas. Thank you, Leo. Merry Christmas to all of you guys. Merry Christmas to everybody watching us and everybody in chat.
Likewise.
Okay,
I think we should all take a minute and just share a quick favorite thing about Christmas this year. What did you guys do? What was your favorite thing that happened this year?
Every year I buy everybody in my family something special. So, I think it's really, really important, and I try to teach my kids this, to be good gift givers. So I bought my wife a watch, and I bought each kid, I've got 5 kids, so I bought each one of my kids, like a piece of jewelry that they'll be able to keep. $81. The high of silver is $81. So a piece of silver, not silver. I'm sorry. A jewelry piece, and that they'll always have. Tiffany bracelet from one of my oldest daughter. Tiffany necklace, diamond necklace from my daughter, my middle daughter, and then youngest daughter got a watch.
Very nice.
Yeah, my son's got medals. They're Saint medals, Saint Gabriel and Saint Daniel, with an inscription on the back. So it was that's my favorite part. My favorite part is always giving the gifts. $81. This is unbelievable. This is just an unfucking believable trade.
This was my first Christmas as a grandma.
Oh, what?
How about that?
How does that feel?
Weird. I'm 41. So
I'm also 41. I can't imagine being a grandpa.
I'm 57, and I can't imagine being a grandpa yet. So were you with your grandbaby, Sara?
Not for Christmas, but I was there for Thanksgiving. So I'll go there for her next Christmas when she kind of like knows what's going on, because she's only 4 months old.
Right.
So next Christmas will be really fun.
Leo, how about you guys? Cal?
Honestly, we had a great time. My wife's family came into town. My in-laws live 5 to 10 minutes away from here, and so I smoked a turkey for Christmas Eve, and then I smoked a brisket for Christmas Day, which means I spent a lot of time tending to the meats, if you will. But now we all got together, all the boys got together. We did a bourbon tasting, so that was pretty fun. And just hung out as family. So that was pretty special for us, especially with, we have the little ones are growing. We've got our little ones, and then the some of her family members, they have a few little ones as well too. So it's kind of cool to see them start to play, right? Because last time we were together, they were too young for that. They were just babies, and so now we're starting to get to that phase where some of the kids are playing with the other kids, so that's fun.
Oh, that's awesome.
That is fun.
Yeah, my best part was the kids were all, we have them get each other gifts. I mean, even obviously it's from us, but they were all just very, very appreciative of each other. And it was very sweet. I mean, normally Christmas, they last like 30 minutes, 60 minutes, and they're going batshit crazy. They're 12, 7, 6, and 3 right now. So, but they were all very appreciative of each other. And they made it like 4 hours before they started going crazy. So that's pretty good.
Nice.
How old are your kids? How old are your kids, Cal?
12, 7, 6, and 3.
Oh, what a fun age. Those are fun ages. Mm-hmm. Elf on the Shelf. Do you guys do elves on the shelves?
My wife does.
Oh, yeah.
She hates it. She's like, she does it. She gets so excited about doing it. And then the entire December, she hates doing it because she's like, oh, I got to do the elf again. We're running out of ideas for the elf. I'm like, then why do you do it?
She'll miss doing it when it's time to stop doing it. Oh, no, you guys have a bunch of years left with it.
Oh, yeah.
That wasn't a thing when my daughter was little. I would have liked to have done it, but it wasn't around.
Yeah, it wasn't a thing when I was little too. We just had the like the countdown stuff or whatever.
Yeah, like the advent calendars.
Yeah.
All right, let's talk about these charts. So far at the open, we've got Everything's green at the open. Everything's still inside last week's range. ES was the strongest one last week as it took out 2 weeks ago's highs. NQ was the second strongest. It took out previous week's highs. It did not hit its target. So weaker. And then RTY and YM were inside weeks last week. So both kind of just not doing shit. This week, though, we're set up for some movement in YM. Looks like closer to the upside, so potential for new all-time highs there. RTY is definitely weaker now, but it did take out its all-time high before the others did, so now it's like slowing down. So for these two, we're going to wait and see like if we can get out of last week's range. If so, you know, your targets are above for YM. Like there's not that much, but that you know, you target a new all-time high. And we want to see ES and NQ get out of last week's range and continue up.
Yeah, so let's talk about kind of break down each one of them. You know, I know we're all looking at your charts, but one of the most important levels that I have on NQ, we're sitting right at it. Basically right at 870, so 25,870. For me, this is kind of the breaking point, the determination point of this rally for it to continue. So
is that just because it's a high volume node?
No, it's actually this is more just like a technical reason. If you look to the the proverbial left, you were going to see tons of rejections off of this level. 870 was rejected once, 2, 3, like 4 or 5 times at this point. And now we're sitting here building volume right on it. And so I just see it as a very important area if we're going to continue this rally higher, that we break away from it pretty soon. Or it could, we could fall back into the 25, like the 700s. And then below that, starts to get below like 650 to 700s. I think we start to lose this momentum that we've had to this upside move. So that's kind of the most important area for me is coincidentally basically where we're at right now. But I'm curious to see to hear what you guys are looking at.
Yeah, I mean, first of all, it's 869. Get it right, Leo. Not 870. I mean, like, what? You were right there.
You always have to do this, Pharm. Always.
I do. But yeah, I mean, like, I've been watching that that RTH gap, right? I mean, basically, you had whatever the hell day that was, where we gapped down. I suppose we had Monday the 3rd of November gap down into Tuesday the 4th, and that gap ran like 893 half to 26.015. So like it's a big gap, and you're right. Like we kept coming up there and then just selling hard. And I mean, like all the upper wicks, if you just look at a 30-minute chart, it was just like, run those stops. And I've been waiting for them to run those stops since November. They finally took them all. And so I literally had an alert set there. So I didn't really trade last week, but I wanted to see, a push through those highs, which, the highest of those I want to say was 893 half into that gap, and then see what happens. Right. So like to me, if you're a seller, if there's one reason you're going to, come back to work last week or come back to work this week, it's for that kind of setup, run those stops and then take it down. But there still has to be some kind of downside momentum created from here. And you can see it looks like you got my chart up. So, I mean, yeah, we put in some volume here right around 869. You're going to have to see like at least the prior day low taken out, right? To trigger like any kind of bearish potential. That would be good. Because to me, like if they just if bulls just go in and they fill in that RTH gap and we're accepting back over 26K, 26.015 or whatever, then it's kind of a done deal. But like to me, this is the line in the sand, and you've got this taking place right as ES is sort of flirting with its break, right? So 69.52 was the prior RTH all-time high on ES. If you look at SPX, because now we've had contract roll, right? So SPX was 69.20, and basically Friday's low on ES was the prior SPX all-time high, 69.20, roughly. It's like one handle off, right? So to me, you've got, I've still got the NQ chart up because I think it's more important here, but You've got ES just kind of flirting with that all-time high breakout, this multi-month balance range, with NQ at a potentially susceptible spot. So like this is a big moment here. If NQ just shits the bed from here and ES fails its breakout, then suddenly you're going to be a little bit less bullish. But if nothing's stopping NQ here and it just runs through that gap, then I mean, it's an upside breakout, and it's setting up for a good start to the beginning of the year. So I think this is an important week, but I'm going to reserve judgment until the first full week of the year 2026, because like on a 3-month balance break, I kind of want to see high levels of participation, not just like Santa's elves, putting in 400K contracts on a day on ES, something like that. So let's see what the big money has to say at the beginning of the year.
Yeah, and I mean, realistically, we're only 400 points away from a new high, right? So that's nothing for NQ to be done in a day. Shit, could be done in 2 hours. So I think got to be aware of how close we are to those highs. As if you're looking for kind of that bearish situation, and just realizing that if they want to jump the pedal on this thing, they're bulls are not afraid to.
That's right. It's time for sellers to shit or get off it, I think, here. I mean, this is the last reasonable spot to defend before a new high on NQ. And then again, if so, then ES just continues its upside breakout. Decent looking high on Friday, I suppose, on NQ and ES. But again, it doesn't mean shit until there's actual, downside follow through. Right. So, I mean, let's see if we can crack Friday's lows and like make it interesting this week. Otherwise, if we just continue framing higher on the daily, there's just not much to talk about. ES is a breakout, and then NQ is searching for that RTH gap fill and then potential new highs. So, be interesting to see if any sellers at all show up this week to keep things interesting or not.
Pax, what about you? Any thoughts on NQ?
No. 25,907 was the upside target. It got there a long time ago. Then the S&P lagged, and then 6980 has been the level I've been talking about since September. And I've been saying this every Sunday, and every Friday show is that the S&P is going to trade 6980 by the end of the year. And well, I mean, we're like literally right there and got there on Friday. So the levels, the targets have been reached, the market goals have been achieved. It's the story now is about silver and gold. The trade will be in the indices. The trade will be the end of the month, the end of the quarter, and the end of the year trade. So the story's over. I mean, the trade's over in the indices. The story's in silver and gold. We'll talk about that in a second. But be ready for the late day trade or for the end of the year trade. It's usually a very good trade. There'll be stuff to do, whether it's higher, lower, or nowhere. There'll be intraday swings, 15 handle swings, S&P 65 handle swings, NASDAQ. There'll be things to do, and ultimately the only thing that matters now is where they take out, where they close the indices at for the year, and then of course, and we'll talk about this next Sunday. Are we doing a show next Sunday? I think it's important, actually.
I think so.
Okay. So we'll know.
Oh no. Well, Sav hasn't sent out the thing yet. If we are,
let me look at the date. I think that's the
4th.
The 4th.
I don't see why we wouldn't.
Yeah, we would. So the most important thing that I'm going to use is going to be the yearly opening range. That's where we close the indices and where we open the indices. That's the range. Last year in the S&P, that was 59.49, and if you draw a horizontal line in the S&P at 59.49, you'll see how really pivotal and very, very important the yearly opening range is. And in the S&P, that was 21,269, I think. Yeah, it was 21,269. So draw a horizontal line at 59.49 and 21,269, and you'll see how pivotal those prices are in the big scheme of things. I know a lot of you guys are looking, a lot of you guys that are listening to this are looking at really short-term scalps, and I scalp, as I show on Fridays in my stream, I scalp into the market, but I'm looking for those scalps to turn into swings. it's intraday swings, 50 nano swings, intraday swings that can be 30 points, 40, 45 points, 60 points or more. And that sometimes become longer term trend swings. And the beginning of the year oftentimes will give us that. My opinions, I've talked about my opinions on the show. I have talked about my opinions on Twitter. I think next year is going to be a down year. I think it's going to be a tough year in the indices. And I think we'll know pretty quickly. Now, if we open up I'm bearish next year. Now, if we open up the year and we rally, I will be long above the opening range, and I will trade to my levels and to my targets. I will be reluctantly long. But I think we really have to all pay attention to the story that silver and gold are telling us. In this show, we have talked about gold, and I've said above 4,400, we've got another $1,000 into the trade, $800 to $1,000 into this trade. So gold now targets up to 5,200. That's where the next swing is completed. Silver, who in the fuck knows where silver is going to go? Don't sell silver. I keep seeing people on Twitter all weekend long talk about how they should sell into this rally in silver. Don't do that. Who knows where silver is going to go? This is these sorts of moves have happened 3 times during my lifetime. 1979, 1980. That was the Hunt brother run up. Silver ran from like change from $3, $4 to $50.36, something like that. Let me look at a longer term chart. We ran up 1979. Silver ran 490%. Right now, silver is up like 190% from low to high of the year. Silver ran from the Hunt brothers run up in 1979. It ran up 480%. In 1980, when the Hunt brothers high was made, it ran up 365% or something like that. I could be wrong. And then even in 2011, it had a much bigger percentage move. And I'll tell you what that is in just 1 second. Give me a second to look at. It was 200 and something percent from the low of 2010 to the high of 2011. So, this is a huge move in silver, but percentage wise, it's not the biggest. Stay out of the way of a running freight train. If you're trading silver, if you got the cojones to trade silver and you got the margin to trade silver, trade it from the long side or use the opening range if you want to use a daily pivot. Silver is trading in $3.20 swings. It's $3.20. Period. Okay. 79.70. The next target on the upside is 82.90. And then swing. If we get above 82.90, swing that up another $3.20, and you got your target above that. So you can trade every $3.20. If we make it back down to 79.70, you can get long. If we get below it, get short, take that down to 70, whatever the fuck. It's $3.20 underneath that. I'll tell you in a second. 76.53. Okay, this isn't rocket science. It's how you're going to manage yourself. So how do you stay flat and do nothing in times of volatility, or how do you decide to hit big league pitching? You want to be a big league hitter? That's big league pitching in silver and gold. Gold is up $150. Gold swings are $155. So you're looking at gold swing at $155 all quarter long, until the end of the year, and then I'll give you a different swing. So that takes us up to 4604 as the next target. 4604. 4604 is the next upside level. But there's a lot of movement left in here. And I think, okay, so not to belabor this point, because I think that a lot of you guys are equity traders and don't want to hear this, but we really do have
I think the chat was said all we should talk about is silver.
Okay. Well, I
mean, we shouldn't, but yeah.
I think we should.
A lot of people are interested in this market because it's one of those things where, just out of nowhere, this thing is nothing happens out of nowhere, but this thing is exploding, right? And this is the storyline for many weeks, likely, especially with what China is doing. So it's nothing wrong with belaboring any point on silver.
I was thinking today, I was driving home from working out, and I was thinking about when was it? Like 2-3 weeks? It was like 3 weeks ago, 4 3 weeks ago when CME went down, silver was trading at $40. It spiked up to like $40 and something.
Right, right.
We're at $82 right now.
Yeah. Double.
Yeah. I mean, $82. The yearly opening range in silver is $29.31. Made a low of 27.54 and then rallied. It's done nothing but rally. You know, I mean, what top pickers? I always warn people not to pick tops and not to pick bottoms, especially in runaway freight trains. I don't think anybody is I don't think too many independent traders down to retail traders are picking tops. I hope they're not. You know, if they're listening to me, they're not. But you know, what top do you want to pick? You want to sell the Hunt Brothers high at 49 or $50.36? That's where, look, the quarterly pivot. You know, the quarterly pivot in silver is $50 and I want to say 50.35, but it's not. It's 50.93. 50.93, you know, and when we set that quarterly pivot late November, early December, that was, I mean, we're at $82. That's just a phenomenal trade. So part of trading like the opening range, you know, there are staggered opening ranges, and the opening ranges, and you know, and I mean, every day I put out a trade plan that I'm prepared to trade. S&P is my primary market. I'm prepared. I put out targets for the S&P, NASDAQ, Russell, even though I haven't traded the Russell in a long time. 30-year bond, gold, and silver, and crude. You know, and the opening range gives me the ability to be able to trade whatever is moving at the time. Sara and I talked about crude for 2 weeks, for a month, for 2 months.
Well, yeah, a long time.
Yeah, buying crude at $55.10. I bought it at $55.10, and I ended up getting stopped out of my last 200 trailing stop on Friday. But that was a great trade, and I'm going to regret not keeping 1 or 2 of those as a runner. But it was a great trade, and I'm happy with it. It gives we have the ability to be able to, as long as we're well enough capitalized, to be able to trade the markets that are moving at that time. Right now it's silver. Right now it's gold, and that's the story. The story is the metals, and then we all have to look from a capital standpoint. What is this telling us about the indices? I do not think that this run-up is at all bullish for 2026. I just don't. I don't see how it can be. I think it's signaling fear. I think it's silly. You know, the debasement trade is getting awfully scary. You know, this is just getting really, really interesting. You know, I will be reluctantly long, like I said earlier. If we set the opening range and rally, then, you know, S&P can see 2,300 or 7,300. But, you know, if we open up and we trade below the yearly opening range, we start trading below the quarterly pivot for the March contract in the S&P at 67.95, I wouldn't buy a break until we get down to 60.10. You know, maybe 66.58, but 60.10. You know, I mean, we really can fall apart here. You know, a rug pull can be dangerous. Look at 2022. We opened the year at like 47.20 and rallied up to 48.08 the first week of the year. January 4th, we set the high at 48.08. We broke 27% that year, you know, on inflation fears, right? And of course, interest rates were running all over the place. But it was an important year. It was an important trade. And people that bought dips that year, very well-capitalized traders that bought dips in 2022 got destroyed. When if you're trading, you know, the Strat, you're trading the opening range, you're trading order flow, Leo strategy, you know, and you're trading Cal's technicals. If you're trading those things, your risk is defined. You know what direction the market is telling us in real time where it's going. And you can go ahead and you can manage your profit in those circumstances. And you can make a lot of money not fighting the markets. You want to fight the markets, you'll get the same results as every other asshole in the world. You'll pick me up in your fucking Uber Black when I go to the airport tomorrow at 5 a.m. I guarantee you the fucking schmuck that picks me up tomorrow with my family is going to be a former fucking S&P trader.
That's funny.
Buying breaks. I'm sorry. I get aggravated when I see people doing stupid shit. Now, again, if we open up and we rally you guys, I'll be long, and, you know, I'll be less long than I'll be short, but, you know, okay.
All right, so
Yeah, I
Pax, you have some opinions on what's going to happen next year. You said.
mean,
I think I just gave them. I think we break.
All right, so hey, a quick question for you
I
before.
think, let me tell you this. I think this chart looks like 1999 and 2000. That's what I think we've got. We can have that coming at us. And that was an 85% break in the NASDAQ.
99 and 2000. Oh, okay. Wow, that was a long time ago.
Not really.
All right, Pax. Quick question for you on the yearly opening range. I've heard you say that a few times, and I'm sure the chat has as well. What is the range or the time range for the yearly opening range?
It's not time like it is during the day. It's just it's where they take out so I'm going to look at two different things. I'm going to look at the extended trading hours, the E-minis, and then I'm going to look at RTH. So where they take out the markets, where they close December 30th or 31st, whatever the last day of the year is going to be, and then where they open on New Year's Eve night, when we have this opening like this on New Year's Eve night, and what that very first tradable price is. So where we close and where we open, if we have to turn it like this, that will be the yearly opening range. And then so I'll do it. The extended trading hours is going to be the one that's more important, but I'll pay attention to RTH too. Just
so you're talking Wednesday's closing print from RTH.
Let me look at a calendar.
The 31st.
Yeah.
Yes.
Okay. So the RTH close compared to when the markets open, reopen Thursday, Globex night.
Yes.
The Globex open. Okay.
Globex open. Yeah, that will be the opening range.
Okay.
Long above it, short below it. Don't fade it.
Yes. For the year though. So, and then you have your targets and whatnot, obviously derived from all that.
Right.
I got it. Cool. I don't have any silver experience whatsoever, so I'm not going to pretend to pull up a silver chart and give you my opinion, but it looks like Pharm has got a little silver action going here. Sarah, you might have some thoughts on silver as well. Why don't you guys kick us off?
I'll mostly let Sarah run it, but I just wanted to have it up while Pax was ranting about it. I mean, silver has one thing left to do, and that's it. And that is to go up and to the left and get your silver bugs from 5 years ago a little bit happier. It's just absolutely insane. And if you want to try to short the front side of a move like this, good luck to you. I would want to see some kind of a significant break. I mean, I'm eyeballing just quickly this 72.5, 73 spot here. I mean, I'd be looking to buy that probably, depending on how it gets there. I mean, that's a long way away from where it's at right now. But I mean, you're basically at the point here where, like, if you can't trade an active developing profile really, really fast, then yeah, I don't know what you're trading off of with new entries anyways. I mean, this thing is crazy to me. So like, upside levels don't mean shit. Like, you can have all the extensions you want. This kind of a move, they just don't mean anything at all. So like, you should never be selling some random extension on this. And then in terms of dips, you're just looking at how the profile builds and the volume builds, and trying to pick a good spot. But yeah, I mean, to me, like, the only legitimate dip buy spot would be down on that 72.5, 73. Other than that, it'd be on a shorter time frame profile, and just looking to pick off the scalp and see what your runners can do. But I am not interested in picking a top on that at all on silver. So I'm going to stop looking at it, because that is pretty wild.
And honestly, people who are trying to pick a top is probably why it's going parabolic, because people keep trying to short up there and then they're getting smashed.
Well, retail traders and independent traders and retail traders are two different things. Independent traders and retail traders that would be picking tops are such a small part of the volume that I think it's insignificant. We have there are much bigger powers at play here in silver in this run up. We all have to remember that silver is a usable. It's got commercial uses and it's a commodity. There's only so much of it. Where in the hell is it? I think that's the issue. How much is out there? Nobody knows. People want to know. CME doesn't have enough to be able to cover CME doesn't have it. It doesn't have anywhere near what, enough to be able to cover delivery. Thank God nobody's going to, thank God too many people don't actually take delivery from CME. But the point is that and what's going on geopolitically with the metals. I saw somebody, Cooper, I think, had said Russell's next. No, the Russell isn't next. The Russell is a fucking index of 2,000 beaten down U.S. stocks. This is a commodity, two very, very different things. Do not read too much into it. And this commodity was artificially held down for a long time, if you believe in conspiracy theories, which I kind of do, and now, it's breaking out for a lot of reasons that none of us will ever actually know, and we really do have to just stay out of the way of it. Now, if it starts turning down, define your trades at 80, like I said earlier, 82.90 to 79.73. 82.90 to 79.73. We get below 79.73, you can take a short there with a stop right above it, right or right out. If you're not long from below, don't trade this. And if you don't have the appetite for risk, don't trade it. Just look at it and try to understand the capital flows, which are crazy enough to think about.
Yeah, somebody was mentioning in the comments, obviously this is not a retail move, from short squeeze standpoint. This is
right.
Macro driven for sure.
Right. That's kind of my point. I think that was my point. I think I said that. I meant to say.
I was just reinforcing you, brother.
Thank you. This is fun shit. I mean, this is the stuff. I'm going with my family on vacation, for a couple of weeks, but this is the stuff that charges me up. This is the stuff that is exciting to me. When we have things like this, I get excited. If we didn't have silver and gold running like crazy, we'd be talking about the S&P trading right at my long-term target from 66.58 to here. But how uninteresting is this? It's interesting, and then everything else is just speculation, right?
Yeah. So Pax, since you have that experience of trading this specific market, during some pretty volatile times, what anything outside of this your opening range break strategy that you would use or deploy on a market like silver?
Yes. Yeah. So silver trades, silver's quarterly pivot is $50.93. So all quarter silver is trading in $3.20 moves.
Yeah.
So that gives us, I really don't trade gold from an opening range standpoint or silver from an opening range standpoint, but I will trade it from swing levels. So 50, let's see, real quick, 50.94. Above 50.94, the first upside target is 54.14. So write this down if you guys are at home listening. 54.14. So you get long above that. You're going to take profit at 57.34. This is the exact same way that I trade the S&P every day from the opening range 15 handle swings. You're going to take profit at 57.34.
How do you get that number?
All it is just $3.20 higher from the last one.
Just math.
We talked about this, Sarah. We talked about that level when we were trading at like $54, and and it seemed on Sunday night a couple of weeks ago, and it seemed like it was 45 miles away. Holy shit! We're at $82 above that. So 57.34 plus $3.20 is 60.54, plus $3.20, 63.74, plus 66.94. You guys can do this at home if you want to. Set plus $3.20, 70.14, which we were all here last week. 73.34, 76.54. That's my average long in this last trade. Plus $3.20, 79.74, which was Friday's high. It was 79.70. Plus $3.20 is 82.94, and I think we may have traded close to that tonight.
82.67.
Yeah, not quite. And then above that is just another $3.20. So if you're sitting here flat and you're looking for a silver trade, look for a long on a breakout above 32.94, because then that'll take us up to 86. 86.14. 86.14 seems like it's like, it's a crazy far, away swing, but that's kind of why I painstakingly went through all of those other swings in the 50 and 60 and $70 range, because we're just so far through it. Now, again, don't start swinging. If you're going to take a long at 79.70, you got to wait to take a long at 79.70. You need to get long at your risk, or at 82.94. You get long at your risk. You get long, and the market needs to go bid above that, or short at that level. The market needs to go bid above that level immediately, right or right out, rut row, right or right out. If you buy 79.70, 79.70, whatever it was, 79.73, 79.74, it's got to go bid immediately. And then you put in a scratch stop. Okay? A scratch is as good as a winner, especially in this kind of volatility. You don't want to buy 79.74s and put in a $76 stop. There's no need for it. This market has given you $3.20 swings pretty consistently. You just have to be patient and wait for those levels. Does that make sense? So that's the way that I would set up this silver trade.
So where does the
I have set up the
$3.20
silver
number
trade.
come from?
I'm sorry, say again?
Where does the $3.20 number come from in the chat?
Nah, that's proprietary. I'll tell you that later.
I'll tell you, chat, after he tells me. All right. So I don't think we really got a good breakdown on ES from Pharm and Sara. I think you guys are more active in ES as well as PAX. But I don't know. Pharm, do you want to take us through a bit of a drive through on the ES?
Yeah, I can do ES.
Army.
Sure. Let's see if they get my charts up here. So as I mentioned briefly earlier, we had the prior all-time high on ES, which was that October high, 69.52 on an RTH basis. And we have now broken above that. So we've got a couple of months where we've consolidated. So I'm considering it's going to be a 3-month balance range to me. You could consider it 2+, whatever, it doesn't matter. But 69.52 is that prior all-time high, which we have taken on SPX. That same high, keep in mind we've had a contract roll, so SPX was a little bit higher relative to ES here, was basically Friday's low, was the 69.20 SPX all-time high from October, I think it was, right? And so that's why I've got this 69.67 to 69.69 spot in here to capture Friday's low, also capture the prior SPX all-time high, because when you have these large balance ranges, I mean, keep in mind you always have distribution in any kind of a range. You also have accumulation occurring. It did seem like the distribution was somewhat significant. That doesn't mean that those people that were deciding to get out are correct, and it doesn't mean we can't go higher. But breaking and sustaining this multi-month balance is what is going to be key into the beginning of the year. And I'm going to be watching the first full week of the year. So there's a little bit more volume than just Santa's elves putting in a few contracts, right? I want to see a high participation breakout. So this is a low participation breakout. It looks amazing so far. I mean, technically, this is what it should look like. We got a nice back test from above of this 52 to 55 spot, the prior all-time highs. Now we've back tested the SPX prior all-time high. I mean, this looks great. The Friday high had a bit of excess on it. But the thing was straight up, right? All week, and really from the swing low the week before. So can we forgive bulls a little bit of a slight hangover day? I think that's fine. I also made note of the fact that, this low after this hold of the prior SPX all-time high, that was also a look below and fail of the initial balance low on ES on a pretty clean balance day. And honestly, the fact that it did not make it back to the opening print, I found that to be a little bit weak on ES. So some very, very subtle signs of weakness, but I'm nitpicking, admittedly here. So, to me, as long as this break sustains into that first full week of the year, then this thing goes higher. And if it is given back, then it is potentially problematic. Now, we have all the room in the, or not all the room. We got a lot of room, a decent amount of room for a daily high or low. If this is given back, sometimes you get these little traps. And we've talked about these a few times, some of the prior balances on this show, you get these false failed breakouts, right? Where, you know, you get max short on a failed breakout, and then you just get some kind of a daily high or low, and it re-breaks. I mean, it's not the best look, but you know, that is a possibility here. So I really think you need to start talking about taking out prior week's lows to really feel confident that we're back in this balance. So we've got this RTH gap down below that the bulls need to protect, right? So that not last week, but the week before closed and had high of week at 93 3/4 on an RTH basis. And then the RTH low, you know, this past week was 69.08 half. So ETH put in a little bit of trade there. But we've got an ETH and an RTH gap sitting there that offers some protection, I suppose, for bulls if this 69.52 is given back. But I do think a lot of this is about NQ, and that's kind of why I led with that. We had all these, honestly, I'm such a boomer. I can't remember if I was talking about this beforehand with you guys or on the show, but basically, I mean, I had an alert set for this 900 spot, and we have an RTH gap above on NQs. It's a bearish gap. And then we just had numerous swing highs put into this, basically 869 to 893 half range. And we finally came up, and I was looking to see those stops taken, and then potentially a reversal back down. And so that to me is going to tell the story here. I mean, again, you're going to have to start cracking prior days lows for anything bearish to happen at all. And so to me, if sellers can't get it up for this this week, then, you know, it's likely that the ES breakout sustains for this week into next week. And it's likely that NQ fills its RTH gap, but that runs all the way up to 26.015 half, I believe, on NQ. So to me, that gap needs to be considered resistance until proven otherwise, but sellers have to do something with it. And then you've got the same bullish gap down below 628, kind of a poor weekly low on NQ, and then the prior week's high, you know, being 600 basically. So you've got, you know, protection on both sides. Seller, you're kind of trapped between a couple of old RTH gaps on NQ, and I think that really kind of is going to drive the story. But again, on ES, it really is about that 69.52 spot, and if that sustains, and then I mean, again, like one day intraday, if it's lost, is it the end of the world? Does it mean that we're going all the way back down to October, November lows? No, not necessarily, but just know that like the risk of bearish things happening is there if we give back that prior all-time high. I like this 69.33.36 range here. Again, like on a thin week, like if I saw what I, you know, the similar structure here that I see, you know, and it was a full participation week, I would like blindly bid that spot instead of 5-handle stop and go to sleep. But you know, we'll see, given, again, low participation last week, likely low participation this week. But I would still monitor that spot if there is kind of some breakdown. But we have not seen sellers take out a prior day's low. It's been quite some time since basically the swing low. And I mean, that's kind of the first order of business, right? At least bring the daily to balance, because currently it is framing higher. And as long as that continues, we go higher. It's very simple. Favor longs. And then even if we do take out a prior day's low, you know, let's say we come out and Monday takes out Friday's low, right? And it comes down and it holds 52 to 55. And we've just got like a 3-day balance sitting right up here above the breakout level. That's not bearish until it breaks to the downside, right? Until or unless it breaks to the downside. So to me, everything is constructive until it's not. And really, it's just a big spot, especially on NQ for, you know, if sellers want to wake up and have a little bit of fun, this would be the time to do it. Trigger a failed break on ES, and then, like, you know, maybe the end of the year sucks, but like, you know, it's hard to see that. But that would be the risk here, you know, if I were max long, chasing this breakout, for example. But it's going to be all about the beginning of the year. To me, is going to be all about really where December's high ends up. How high do we go in December? I'm going to consider that. I'm pretty sure it depends on the structure of this week, but I'm pretty sure I'm going to consider it a 3 months balance. And so to me, I'll be looking for an upside break of that balance with continuation at the beginning of the year, the first full week. And if so, then we've got targets up, I would say like 7,300 range easily. So if that fails and we start offering the yearly open, PAX's yearly pivot, then it's going to look kind of bad. So to me, all about the 69.52 spot.
Pharm, pardon my ignorance here, but is ES already trading new highs, new all-time highs?
Yep.
Okay,
It is. Yes, on a non-back adjusted chart is trading new all-time highs. If you back adjust like a weirdo, then it's technically not. But also,
we don't
like,
let friends back adjust charts here.
That's
Okay,
right.
Pharm?
That's right. When in doubt, like double check SPX. Like depends where you're at in the contract cycle, right? Because if you're at the end of a contract, right? If we had come into new all-time highs at the end of the contract, SPX might have been at an all-time high, but ES might not have been, right? And then if you're at the beginning of a contract, you can have ES making a new all-time high, SPX not. So I just always double check at the beginning of a contract, at the end of a contract, and as it stands, both SPX and ES, non-back adjusted, like real traders, have made new highs.
I'll bet you the Uber driver picks me up tomorrow, back adjusted his shit.
He probably did, Pax. I'll agree with you on that one.
That was great analysis, Pharm. Thank you. It was really, really fun to watch and listen to. And I took notes while I was listening.
Sarah, what do you think?
Listen, if you guys aren't taking notes, Chad, if you're not taking notes, listening to Pharm and listening to Sara and listening to Leo, I don't know about notes taking, listening to me. I might just aggravate you. But if you're not taking notes, listening to everybody, then you're missing out.
They love you, Pax. They love it. They take your notes too. So for me, you know, this is the last trading week of the year. It's a short week. I don't even know. I'm not going to be trading this week. I'm happy to take time off, so I am taking time off. I don't know if we have a 3.5 trading day week or a 4, probably 3.5, probably just like last week. So it is a short week. We are up at all-time highs, like Pharm was just saying. And I mean, I don't see anything crazy happening, you know, at the end of the year. So I think they're just going to keep trying to pretty much close it at the highs. And then like PAX, I would love a crash. And I know people hate to hear it, but from a trading, like a day trader perspective and a shorter term trader, I would love that. Like we got that this year. If you guys remember the beginning of the year, we had a crash and it was a perfect buying opportunity when we took out that low down there at 49.63. And then we've just gone up ever since. So it'd be really cool, you know, if we get that again or something like that again, because the VIX is getting pretty low and shitty and boring. So I also hate trading when the VIX is low, and I hate trading when we're at all-time highs. It'd be really cool if we did get another year like 2022 where we took out the previous year's highs just barely, and then we went outside year. Like that would be awesome. But as far as next year goes, I have no bias until we open. It all kind of depends on the open and the continuity. So whether the candle's red or green to start the year, and if we're above or below that. So pretty similar to like how PAX does it. That's how the Strat does it with time frame continuity. So I'm just chilling. I'm not doing anything this week, and then we're gonna come back all fresh. And you know, Alex and I have had 2.5 weeks off by the time we come back on January 5th, and then we'll get to it, and we'll have the yearly charts will be open, and we'll have a better gauge of what's going on. So I mean, to like wrap it up, I don't see any crash happening in the next 3.5, 4 trading days, and I'm just excited to come back next year and see what we can get.
Sarah, what do you do at the beginning of the year to keep yourself on guard for any potential regime changes? Because you know, often at the beginning of the year, it can sometimes be a big change in pace. You know,
It's
just
huge
for the market. So, what are some of the techniques and things that you look out for?
So the very first thing that I do as a strat trader, we use all the time frames. We use the yearly time frames. Like I've called every yearly breakout in Bitcoin based on the yearly charts. Like back here in 2020, we had a double inside year up. Back here, same, we had an inside year and up. So what I do is I go through all my charts. For the futures, we're nowhere near taking out. Okay, so we're nowhere near like a strat reversal because we're going to close pretty much at the all-time highs. So that doesn't really give us anything actionable on a yearly basis. But I also trade stocks. So I go through, I have a list of like 65 ticker names, and I go through and I look at the yearly charts and I mark my yearly triggers. And so those will be the focus for the year. Like, and you know, most of them are not going to have yearly setups. So it sounds like it'll be a lot, but it won't be a lot. because they're not all going to have yearly setups. And then that's how I start the year every year. And then
What
we go from there.
What about you, Pharm?
Yeah, I mean, we're fortunate, I think, in this situation that we've got this multi-month balance coming in the beginning of the year, which we also did in 2021 into 2022, and we did in 2024 coming into 2025. So a lot of similarities there, and it tends to make things relatively straightforward for me. Like I said, if we get a failed break of that multi-month balance to the upside, then my initial tendency is to lean short, potentially looking for the bottom of that range. And then it starts to look like that was a truly distributive range, which could then break to the downside. And I'd be looking at a back test of prior all-time highs in the 6100s. And if that breaks to the upside with continuation, then I know that I'm just staying long, kind of like PAX, but grudgingly a little bit, up into probably 73.20 on SPX, 73.69, give or take on ES would be my big picture targets. If this breaks to the upside, you don't want to fade a multi-month break to the upside, but if it does fail, it can roll over, and it can roll over hard, and I am all for that.
Those failures can be more fun to trade than the breaks to the upside, to be honest. But
They are. I love failed.
I feel like
breaks
everyone
both
in the
ways.
room right now is itching to slam that bid. So, I think that's something to keep in mind too.
Yeah, and like Pax said, I'll trade it long for sure, but I'm being very, very cautious with my long-term accounts right now.
Yeah.
I'm raising some cash. I will have hedges on. I think there is a significant risk here, and I'll make my money trading it on the long side. And my long accounts will underperform for the first time in a while, and that's fine with me.
Pax, anything from you to start the new year? And then I saw you said that you were going to cover Bitcoin too.
Yeah, somebody asked about, what do you think, Leo? I mean, I've talked about what I think about the beginning of the year. What do you think?
To be honest with you, I don't really have any opinions going into the end of the year or going into the new year, other than it's a great time for me to pause and reflect on the things that I want to improve on as a trader.
Yeah.
And I use that opportunity, just to just reorient myself with, my own goals and ambitions as a trader and just also as a person. But then also, I think, there have been a couple of years where I've gotten caught off guard with brand new volatility and regime change at the start of the year. And so for me, for me, it's just going to, as a result of, those learning lessons for myself, is just not allowing myself to get overly, I guess, overly comfortable with the environment that we've been in for the last 3 months, and be open to the idea that something could change drastically, and which it has happened at many of the turns of the year, and not be overly, oh well, it's just another day. Hey, it's a new year, things can change, and I'm going to adapt with those changes, one, by being open to the idea that things can change dramatically, and then two, also with my size and my risk of sizing down until I get more of a comfortability with the new regime, or just whatever might change. So for me, it's all about just making sure that I'm adaptable to anything that might change as we roll over into the new year.
Yeah.
Yeah, I like that. I mean, I think a great example would be, we've been in this debasement trade, right, with the dollar down and everything else going up.
Mhm.
What if equities start going down with the dollar going down? Impossible, right? Can't possibly happen. I got that last year when I threw that out there in December of 2024, and it's exactly what happened through April, but for totally different reasons. I'm not saying it's going to happen, but like those are the kinds of things, like Leo was saying, that could just like suddenly change on a dime.
Yeah.
Like you think, oh, like this is the regime, like dollar goes to zero, and we bid everything, bid all risk assets, nothing stops the strain, all that kind of stuff. And then all of a sudden you're like, wait, what the hell happened? Like we're selling equities as the dollar sells off, right? There are other reasons why that can happen. It's not like it's some fixed correlation that must hold true, that dollar down equals stocks up. So like you really have to be careful, like Leo said. I think it was very, very well for him to point out that you just have to evaluate the regime that you're in, because it can change very, very quickly at the beginning of the year.
and when it does, you're not going to want to buy dips. I mean, you're just not gonna.
You're not going to want to, for sure.
I saw somebody talk about I'd like a nice healthy pullback so I can start showing my kids how to, invest. No, we could be putting in a multi-decade high, maybe not a multi-decade, but a long-term high. This world is changing and developing rapidly, and things are moving quickly. When, like Leo said, we all have to be very, very we have to be willing to change with the way that things change. I think my opinion is that we are going lower next year, and significantly so. And again, if we rally and there's I like the way you put that, a new regime. If there's a regime change, I will be long. Both Cal and I said, both Pharm and I said, I'll be long. I'll make much more money on the short side because that's what I see happening. Again, I am going to trade my process and not trade my opinion. And as we go into the end of the year, I'll give you my thoughts on Bitcoin in a second. But as we head into the end of the year, to piggyback on Leo's point, we all have to take a look at our year. I've tweeted about this the other day. We all have to take a look at our year, break it down quarter by quarter, month by month, and if you take meticulous enough notes, week by week, and see what we can improve on. And you should be doing this. All of you should be doing this at the end of every day, certainly the end of every week. What did I do poorly? And what could I improve upon? What could I do better? You don't need to beat yourself up over your mistakes. I saw people underneath that post talk about how they destroyed themselves towards the end of the year. Okay, well, it's over with. There's no point in beating yourself up or lamenting or self-flagellating. Look at what you did poorly and improve upon it, and change the voice in your head from beating yourself up to reaffirming some of the things that you've done well, and what could you do better, and what can you improve on, and write things down, pen by paper, or type whatever, but just write it down and put your thoughts into coherent paragraphs and sentences and paragraphs, and build upon that. Anyway, I cannot stress enough the importance of a year-end review, but an honest year-end review, one where you're not letting yourself off the hook on, but giving yourself a little bit of grace too.
Yeah, for sure.
So Bitcoin needs to hold 86, the 100-week moving average. It's straddling the 100-week moving average. It's an ascending moving average still. It's 86,210. Bitcoin needs to hold 86,210. If it closes below, and I mean the futures close. If Bitcoin closes below, from a technical standpoint for me, or trades below it significantly, it will trade down to $74 or 74,000 pretty quickly. And that's taking us back into like April's low, 74,630. If it holds here, then we can trade back up to 101, but it needs to take out that double top that we have at like 95,000. So, the levels are going to be like 74,000 on the downside, 86,210 or 86,200, 95,000. Above 95,000 will trade up to 101,000. I think Bitcoin is subject to what's going to happen, what's going to continue to happen with the debasement trade, and what's going to continue to happen with the equity, what the equities do. If equities hold here and will rally into the beginning of the new year, then I think we can see Bitcoin follow along with it. But that powerful sell-off that we had was a big liquidating event, and there's a lot of money right now being on the sidelines waiting to see if this level holds, and they'll buy strength into it. Or waiting to see if they get out of it. If we take out 86,000, they'll sell into it and take some profit off the table and buy some 74,000s. Underneath there will be at like 50,000. So, Bitcoin is a coin flip at this point for me. It can go anywhere. But I'm prepared for it to go anywhere. I'm still long some Bitcoin, long-term Bitcoin. I'm out of the stuff that I had above 50,000. Interesting shit, though. It's an interesting trade, and it's the world is changing, and it's changing rapidly.
Yeah, I wonder what the next bull catalyst for Bitcoin will be. I don't know. I don't know.
I don't know either. I don't know. Bitcoin to gold. That's an interesting chart. Looking at Bitcoin gold and putting that spread together. Man alive. I heard somebody talk about how if you look at gold over the what's outperformed, gold or the S&P 500?
Gold.
Gold has. Gold has outperformed the S&P over the course of the last 20 years. And what's scary about that is that the entire rally since 2009 has been based upon quantitative easing and money creation and stimulus. Almost, maybe not all the rally, but a large part of it has been, on more debt creation.
Hmm.
And that's why I think we're seeing gold rally. That's part of the reason anyway. A lot of people are scared.
Yeah.
Well, we are right at the end of the hour. And the only thing that I've noticed here is that there's a lot of folks watching and not many liking. So we got to fix that. We appreciate you guys for joining us on Sunday night for the Sunday Open. If you could return that favor just by hitting the like button, giving it a thumbs up or as you might. And also, don't forget to subscribe so that you can be notified when we go live, and it helps other people find us as well on the stream. So we appreciate that. Anybody want to wrap us up with closing thoughts here? Nobody? Going once, going twice?
I don't know. I think we were very, what I love about our show is that we're very clear. There's no equivocating here. We put out what's going on at the time and what our opinions are, and there's no equivocation. There's no double talk. I mean, and I love these Sunday night shows, and I think they're very, very important. So tell your friends about it. Give us a like, thumbs up or whatever the hell you say. Smash the like button. I've heard people say that. Smash the like button. I feel like a boomer saying that shit.
You do. Whatever
You
the hell
do.
you
You do
say.
sound like a boomer, but so
I
do
know.
I. So it's fine.
No, you don't. You sound like a young kid. I sound like an old man. Oh my God. My wife bought me these Viore shorts for our trip.
Yeah.
They're like 7 inches long. I went to go work out in them yesterday. I look like a 57-year-old man trying to look like he's 30 years old. So embarrassing,
Hey,
dude.
that's what they're wearing these days,
That's what they're wearing. That's not what fellas
Where are
might
you
be.
going, Pax?
We're going to the Caribbean.
Oh, nice.
Yeah.
Tired of that Chicago cold?
Oh, miserable here, sister. Miserable.
All right. Well, thank you all for jumping on with us today. Again, don't forget to hit that like and subscribe button. We appreciate you for joining us and helping us grow the Sunday Open as well as the rest of the week. We'll be live all week. We're returning back to normal programming. So we'll see you, tomorrow morning and all throughout the week. So thank you all for jumping on tonight, and we will see you next time.
Merry Christmas and Happy New Year to you all and to everybody watching us as well.
See you, chat. Have a good one.
Absolutely. See you tomorrow.
Yeah, Happy New Year. Bye, guys.